You just found out you're being audited by the IRS. The word alone makes people panic. I know it does for me. But here's the truth. Most audits are not as bad as you think. And if you prepare correctly, you can get through it without any major problems. Let me show you exactly what an audit is and how you could handle it. Hey, I'm John. I'm a tax preparer with over 15 years experience. I've helped clients through audits and I've seen what works and what doesn't. An audit doesn't actually mean you did something wrong. It doesn't automatically mean you're going to jail. It just means that the IRS wants to verify something on your return. Let's break down what triggers them, what happens during one, and how to prepare. So what is an IRS audit? An audit is when the IRS examines your tax return a little bit more closely to verify that your income, your deductions, and your credits are claimed, and that they're accurate. That's it. They're just checking your work. So what triggers an IRS audit? Well, the IRS uses a computer system called the DIF, or Discriminant Information Function. That scores every single tax return. It looks for things that don't match up or they seem unusual compared to other taxpayers in your income bracket. The first thing is high income. If you make over $200,000, your audit risk goes way up. Over $1 million, even higher. The IRS knows that there's big mistakes in those tax brackets or intentional issues that they tend to be. If there's math errors or inconsistencies, if your numbers don't add up, or if you reported something that doesn't match with what your employer or bank reported, that's usually a red flag. Doesn't necessarily mean audit. It could just be a notice, but it could be a red flag. Large deductions relative to your income. So if you made $50,000, but you claimed $30,000 in charitable donations, let's say, they're going to want to see some proof. Same with business expenses that seem excessive. And speaking of, if you have self-employment income like Schedule C business owners, they get audited a little bit more often because there's more room to error. And then sometimes there's fraud. So cash businesses especially get audited a little bit more than your average citizen. Claiming 100% business use of either a vehicle or home, the IRS knows most people use their car for both business and personal. Claiming 100% business use is a huge red flag. Home office deduction, well, this one gets flagged a lot because, especially if your deduction seems large enough relative to your income, you can claim it if you legit use a space exclusively for your business, but you can't deduct your dining room, let's say. It has to be exclusive for the business. And in most cases, you need to prove it. If there's round numbers, if every expense on your Schedule C is a nice round number like $5,000 or $10,000, it looks like you're estimating rather than tracking actual expenses. So keep actual records. If you're not reporting all your income, so if you got a 1099, which is independent contractor, or a W-2 and didn't include it, the IRS already knows. They get copies of everything. This is one of the easiest ways to trigger an audit. So what are some of the types of IRS audits? Well, there's actually 3, but they range from not being a big deal to, hey, I think I need some professional help immediately. The first one is called a correspondence audit. This is the most common type, probably about 3/4 of the type of audits that you'll see out there is the correspondence audit. The IRS will send you a letter asking for documentation to verify something on your return. So maybe they want proof of your charitable donation. That's why you always keep receipts. Or they want to see receipts for a business expense. So again, keep digital receipts if you can, upload them, scan them in, whatever you have. What you would do is just mail those documents in that they're asking for. That's it. There's no in-person meetings. You just do what they're asking. Then there's what's called an office audit. They'll ask you to come to an IRS office and then bring specific documents. This is a little bit more serious than a correspondence audit, but again, still fairly straightforward. They'll review your documents in person and ask any questions, and that's pretty much it. But then you get what's called the field audit, and this is a pretty big one. This is where the IRS agent will actually come to your home or business to examine your records. This usually happens for business owners or high-income individuals with more complex returns. If you do get this type of audit, hire a professional immediately. Do not handle this yourself. So what to expect during an audit? Well, here's how it typically goes. The first thing is you'll get a letter from the IRS. You'll get a notice, you'll get a word that says audit, It'll specifically ask what they're auditing or tell you what they're auditing. So maybe your charitable donations, maybe your business expenses, maybe something else. Doesn't really matter. Whatever they're saying, it will also tell you what documents they need and the deadline to respond. Typically, it's about 30 days. You gather all these documents, the receipts, the business statements, the mileage logs, the bank statements, whatever they're asking for, make sure you have, but only give them what they're asking for. And then 3, you respond. For a correspondence audit, you just mail it out. For an office or field, you might meet with them and present your documents. They'll review everything and make a determination, but there's a few possible outcomes. If there's no change, like everything checks out, you're done, you're good. But if you owe them money, they might say, hey, we found issues and calculated additional tax that's owed, plus any interest and possibly penalties. If this happens, you could pay them or set up a payment plan. The other option is you get a refund. It is rare, but sometimes they find that you are overpaid. If you owe them money, you can either set up and pay immediately or appeal the decision if you disagree. The whole process for appeals can take anywhere between a few weeks to several months for a field audit. If you do get one of these audit letters, here's what you do. The very first thing, don't panic. An audit is not a criminal investigation. They are just verifying what your return had. That's it. Read the letter carefully. Understand exactly what they're asking. They'll list specific items they want to review. If it's business, if it's charitable donations, if it's children, they just want those listed items. Gather only what they're asking. Don't send them your entire filing cabinet. If they're auditing your charitable donations, send them proof of your charitable donations. That's it. Organize all your documents, put everything in order, chronological, by category, whatever makes sense. But make it easy for them to review. And make copies of everything you send. Never send the original receipts, never send original documents. Always keep copies for yourself. And listen, be honest. If you made a mistake, own it. You don't have a receipt for something, say so. If you don't know where you had something, let them know. But don't make things up and don't lie. That turns it from a simple audit to a much serious problem. If you go to an office audit, please show up on time, be punctual and professional. You want to make sure you have all your documents and you are there to support what they're asking. What documents do you need? Well, it depends on what they're auditing, but here's some of the things that they might need. If it's income related, so it's probably W-2s or 1099s, sometimes even the bank statements or business income records. If it's your deductions, then it could be receipts or invoices or canceled checks, maybe even the credit card statements. If it's your business expenses, maybe it's the mileage logs or the receipts for supplies, proof of business use. Charitable donations, well, this could be the receipts from those charities, the bank records showing the deductions. If it's a home office, they might look for the utility bills, mortgage statements, or even the photos of your office space. If it's medical, it could be bills or insurance statements, receipts for any out-of-pocket cost. Whatever they're asking for, you need the proof. Do not say, I know I spent the money. It does not count. You need documentation. So here's what not to do during an audit. There are a few mistakes that I see, and it makes things worse. First thing, do not ignore it. If you don't respond, they'll make the changes on your return without your input, plus any additional penalties and interest. Don't lie, and don't make up any documents. This can turn an audit into a criminal investigation very quickly. It is not worth it. And don't volunteer any additional information. Answer their questions. Provide what they ask for. That's it. Don't start explaining other parts of your return or your life story unless they ask. Don't go in unprepared. If you don't have your documents organized, reschedule, but don't wing it. Don't be rude. Don't be combative. The IRS agent is just doing their job. Being hostile does not help your case. So when should you hire a professional? You can handle a simple correspondence audit yourself if it's straightforward, like providing that you donated to charity or providing a receipt for something you spent. It's fine. Just do it yourself, mail it out. But hire a pro if it's an office or a field audit, if it's usually business income or a Schedule C, or if the amount in question is over like $5,000. Definitely get a professional involved. If you're not confident in your records or the ability to explain them, or they're questioning you for multiple years, These are all telltale signs to maybe you should probably go get a professional. If you think you might owe a lot more than you originally thought, these are all things that you may want to ask for help. There are CPAs, enrolled agents, and even tax attorneys who can represent you. And in some cases, they can meet with the IRS on your behalf, so you don't even have to be there. If the audit results in you owing additional tax, here's what happens. The IRS will send you a letter with the amount due, including any interest and possible penalties. You can either, one, pay it. If you do agree with their findings and you can afford it, just pay it. Move on. That's it. Audit complete. You can also set up a payment plan. This keeps the IRS off your back. If you can't pay it all at once, you can set up installment agreements. The other option is you can appeal it. If you definitely disagree with their findings and have proof to that, you have the right to appeal. You'll need documentation to support your case, but do not ignore it. Don't ignore the bill. It doesn't go away. And the penalties and interest just keep adding up. Listen, the best way to avoid an audit is to file an accurate return with legit deductions and keeping good records. Report all of your income. See, the IRS already knows what you made from your W-2s and your 1099s, your bank interest. They have this already ready to go. Don't exaggerate any of your deductions. Keep your records, keep your receipts for everything you claim. If you own a business, separate your personal, separate your business. Do not commingle. And don't claim deductions you're not entitled to. If you have one child, don't say you have 3. And use a tax professional if your return is complex.